Yeah, I mean, I think we are really in the midst of entering a whole new era of Bitcoin. And if you're paying attention, it seems pretty clear to all of us out there. And I'm glad you mentioned ETFs because that's what we're going to talk about next. So stay tuned. We're going to be back with you in just a second, Andre, because in the second quarter of this year, institutional Bitcoin ETF inflows hit $33.6 billion. Most of that came from investment advisors, hedge funds, and brokers. It is another sign that Bitcoin is no longer being ignored in boardrooms. Investment advisors took the lead. They now hold $17.4 billion in Bitcoin ETF positions. That is nearly twice as much as hedge funds, which are sitting at about $9 billion worth. Now, advisors have embraced ETFs as a way to get Bitcoin exposure without touching the asset directly. Brevin Howard Capital Management stood out by increasing its stake in a major Bitcoin ETF by 71%. That brought its total position to roughly $2.3 billion. Harvard's endowment also made headlines by adding $117 million. That put its Bitcoin ETF exposure ahead of its holdings in gold. This shows where all the confidence is lying currently. Growth happened across institutional categories. Brokers moved up fast, hitting $4.3 billion in holdings. That placed them second only to advisors. Banks, well, they got in on the action too, though at a smaller scale. They added about $655 million worth. The only group that stayed flat was pension funds. They held steady at just over $10 million. Even with the growth, institutions still only account for about 25% of total money in Bitcoin ETFs. Retail investors still hold roughly 3/4 of that pie. Now, despite the rise in institutional interest, Bitcoin is still rooted in the hands of individual investors. This is not only about more money flowing in, it's about how institutions are starting to view Bitcoin. For many, Bitcoin is becoming a long-term allocation alongside equities, bonds, and real estate. ETFs gives them a clear way to gain exposure without worrying about wallets or keys. Now, the rise of Bitcoin ETFs has made it easier for traditional players to get involved. They do not need to change how they operate. They can use the tools that they already know. That convenience is helping fuel the flow of inflow fires. Now, global markets, they still remain a little bit shaky. Inflation concerns keep bubbling up. Looking ahead, though, the next few months could bring even more movement. If traditional markets hit turbulence or if interest rate guidance changes again, institutional demand for Bitcoin ETFs could spike. Retail traders will keep playing their part, but institutions are getting much, much louder. We're bringing Andre back. Andre, $33.6 billion in one quarter is a massive inflow into the Bitcoin ETFs. Are we finally watching Bitcoin move from weird experiment to a core institutional allocation? What do you think?
Yes, I think you've mentioned financial advisors, right? And the survey Bitwise has been doing with redefine actually confirms this. So financial advisors, the share of financial advisors who say like, we've invested into crypto assets has been rising, right? Steadily rising. And the last data point at the end of 2024 suggests like 22% of financial advisors are already allocating to crypto assets, including Bitcoin, Ethereum, and others. So that share has been rising. And also the percentage share, portfolio share, the allocation has been rising. So it used to be around 1%, right, of the whole portfolio, but it's now rather moving towards 1 to 5%, right? So that share has been rising. And if you look at endowments, I think their allocation, their relative allocation, tends to be even higher, right? It tends to be between 5 and 10%. I mean, in general, if you look at all kinds of optimization, portfolio optimizations, you'll actually get an answer to what's the optimal allocation to Bitcoin, right, in a multi-asset portfolio. And it depends actually on the optimization technique. You have different kinds of statistical optimizations, right? Like risk parity or max Sharpe ratio or min variance. But like all of these optimization techniques, they actually suggest somewhere between 2 and 3%, right? But I think as Bitcoin matures and as like adoption grows, institutional adoption grows, this tends to dampen volatility. And I think with this kind of structural decrease in volatility over time, over the medium to long term, you'll actually see higher allocations, which makes sense even based on these kind of statistical portfolio optimizations.
Yeah, that makes a lot of sense. And we're seeing it very much during this quote unquote cycle that we're in, as volatility for Bitcoin has been, I believe, less than it has been for the NASDAQ, or I think even the S&P at certain points this year. So we're certainly seeing the waters tread a lot calmer than we had in cycles past. And even with all of these inflows that we've been seeing, institutions are still only 25% of ETF assets, while retail still seems to run the show at about 75%. Do you think that balance flips someday, or will Bitcoin always stay retail driven at its very core?
So if you look at traditional ETFs, like the SPY ETF, right, SP 500 ETF, which is the major SP 500 ETF in the US, the share of institutional holders is significantly higher, right? It's close to 50%. And if you look at corporate bond ETFs, sovereign bond ETFs, the share is close to 80%, right? Which is like the complete opposite. So yes, I think that share between retail and institutional will shift towards institutional because we're seeing it higher in all these traditional ETFs already. So if you assume that like Bitcoin becomes a mainstream asset, which is also our thesis, right? Will be in every portfolio in the future. So if you assume like Bitcoin becomes a major mainstream asset, so that percentage of institutional holders should actually converge towards 50%, even higher, right? Yeah.
Yeah. I mean, it makes me think we still have a lot of room to run. I know people were so used to those high alpha plays of the 20 teens, but slow and steady up and to the right, especially if you look at the, is totally fine by me. And that's the way Bitcoin has certainly always moved. So great to get your opinions on that. Now it is time, Andre, for our deep dive where we're going to get into your background and talk shop. So let's run the stinger, boys, and get into it. All right, we're back with our deep dive with André Dragosch of Bitwise. Now, Andre, I want to get a little bit into your background a little bit. You're a super interesting guy. You've got a PhD in financial history, which sounds like you were basically trained to tell us why every bubble eventually pops. How did that academic background lead you into crypto and eventually Bitcoin? What was your orange pill story like?
So I think the advantage from my PhD studies is like you get to know financial history, of course, and in my case, you study like the banking system, right? How the banking system works, how money is created. You have to find out where money is coming from, right? Like these essential questions. And the more you know about like our modern fiat monetary system, I think the more bullish you become for Bitcoin, right? Because I think in order to understand the utility of Bitcoin, you need to understand the monetary system first. Because I think if you ask an average guy on the street how like the monetary system and the banking system operates, they'll probably tell you something like, most of the money is printed by the government, right? Or maybe central bank. But the truth is, the majority of the money supply is actually created in the commercial banking system via bank lending, right? It's created out of nothing with every extension of a loan, right? For real estate, for any kind of stuff, for consumer purposes. So that's actually the advantage of doing a PhD because you get to do a deep dive on like how the monetary system works. And I think what also many people still don't get, unfortunately, is like the utility of Bitcoin is not that it's like a new kind of PayPal, right? It's not primarily supposed to be a means of exchange, right? It's, I think, primarily supposed to be a stored value, but also like this combination of being a superior means of exchange combined with the stored value characteristic, like that's making Bitcoin special, and that's the innovation of Bitcoin. So it's like a PayPal combined with gold, digital gold. Some people call it
Right.
digital gold for that reason, and that's the innovation of Bitcoin. And I think if you don't understand where money comes from, it's hard to understand the utility of Bitcoin. But I think we're slowly getting there.
Yeah, absolutely. And we're thankful we have well educated people like yourself helping people understand how to get there because people, it seems like there's a lot of folks out there that are still having a hard time wrapping their head around why it's important. But we're all doing our best to kind of orange pill the world one person at a time, including what you guys are doing over at Bitwise, which I would love to talk about now. As you all manage over $10 billion across crypto ETFs, ETPs, and private funds. Now, for some people in our audience who only know Bitwise as that math thing they forgot after high school, how do you explain what Bitwise does in just a few sentences that anybody could understand?
So Bitwise is a crypto asset manager. So we manage around 15 billion US dollars in assets under management in so-called ETPs, exchange traded products, which includes ETFs, exchange traded funds, which are regulated securities traded on traditional exchanges that have 100% um, Bitcoin or Ethereum or any other crypto asset as underlying, right? So you can trade Bitcoin like a traditional security, and it's 100% secured with the underlying Bitcoins, right? And what we also do, uh, which is also special among any kind of crypto asset manager, is we do publish our on-chain addresses, especially for Bitcoin and Ethereum. So you can always check whether the underlying holdings in the ETP in the ETF are really there. You can check it on chain, right, on the blockchain. And so yeah, Bitwise is a crypto asset manager, and we manage around 15 billion assets under management in combined, right, across the whole group in both US and Europe.